In this video, I'm going to teach you how to do bookkeeping for real estate investors. If you are a bookkeeper, this video is going to be perfect for you. If you are a real estate investor or a business owner, this video is also perfect for you. If you're trying to do your own bookkeeping, I'm going to tell you a ton of tips and tricks how you can do bookkeeping as a real estate investor. If you need help, you can call me or you can email me. My contact information is right there on the screen. Everything I teach is using QuickBooks Online. If you don't already have a QuickBooks Online account, reach out to me. I can help get you set up, or you can just go to quickbooks.com and set up your own account. Here on the screen, we have a QuickBooks Online account. There are a ton of buttons. It's really overwhelming. Let me first orient you to a couple important things. Up here in the top right-hand corner, we have what's called the gear icon. Here you can go to Account and Settings. Here you can make sure all of your company information is correct, your address, your contact info, your company name, and then I want you to go down in the bottom left, click on Advanced. This is incredibly important for real estate investors. You need to get QuickBooks Online Plus so that you can enable class tracking if you have more than one property as a real estate investor. So under Advanced, under Categories, turn on Track Classes and then click Save and then click Done. This way, if we are flipping properties, holding properties, it doesn't matter. If we have income and expenses, we need to track specifically per property. If we have two properties, buy and hold, we need to know rental income for property 1 versus rental income for property 2, expenses for property 1 versus 2. Even if we're flipping properties, we want to be able to track property profitability. So every time we receive money or spend money, we are going to categorize the transactions. That is what bookkeeping is. We are categorizing transactions. We need to identify two things. Who did we pay? What did we buy? But as a real estate investor, there is an additional level of complexity. Not only do we need to decide who did we pay, what did we buy, the third option, which property. So for example, who did we pay? We went to Lowe's. We spent $100 on supplies and materials for 1 Main Street. Or we went to Home Depot, spent $100 on supplies and material for 5 Circle Avenue. Whatever your properties are, you want to enable class tracking. That is the most important thing for all real estate investors. That's the first thing you should do. The second thing, go over here on the left-hand side, transactions, bank transactions. Here you want to connect all of your bank accounts and credit card accounts to the QuickBooks Online bank feed. This way, all of your transaction data gets pulled in directly to QuickBooks. Simply click this green button right here, Connect Account, and then you are going to find your bank or your credit card, and then you need to enter your username and password to log in to your bank, and then QuickBooks will be able to pull in all of your transactional data. Don't worry. Your QuickBooks won't actually be able to move money directly through your bank account. It's simply pulling in the data from previous transactions. This will make your bookkeeping so much easier. Once you have your bank feed connected, now you just start categorizing transactions. Money going out in the bank feed, who did you pay, what did you buy, which property. Money coming in, was it rental income? Was it an acquisition or a disposition? Maybe it was a line of credit. Maybe you have investors, or maybe you put your personal money into your business. Let me show you here this plus new button in the top left-hand corner. Here we can manually create transactions. If you use QuickBooks to print your checks, you can create checks. If you're printing checks, you simply need to say, who did you pay? What bank account are you using to pay? What's the date? Probably today. What's the category? Let me show you how to create a new category. These are your chart of accounts. You have assets, liabilities, and equity, or income and expenses. Most often, you're going to be dealing with income and expenses. So in the category here, in the top left, we have account type. Let's say expense. What is the detailed type? Let's say supplies and materials. You can name this whatever you want. We'll stick with supplies and materials, save and close. Now let's say you just onboarded a new subcontractor. So let's add the payee information. We'll click on add new, and here you need to get their W-9 if it's a subcontractor or an independent contractor, general contractor, plumber, electrician, doesn't matter. You want to get their W-9. This way, if you pay them more than $600, you will be able to send them a 1099 at the end of the year. So let's write their first name Billy, last name Smith. You can add their email address. You can add their mailing address. Most importantly, if they are to get a 1099, you want to check this box right here, track payments for 1099, and enter their EIN if it's a business or their social security number if it's an individual. And then we can click save. Now we have Billy Smith, supplies and materials. Let's create a new category. We're not buying supplies and materials from Billy Smith because he is a subcontractor, but instead, let's choose detail type cost of labor, and the name will be contractors. You can say contractor labor, contractors, subcontractors, doesn't matter what you call it as long as you are consistent. And then here, whatever the amount is, we'll say $500. And then here is where you can add your properties. If you have more than one property, you want to include the property address. I usually don't include city, state, and zip code. That's not necessary. I usually just include the street address. In this example, we'll say 5 Main Street. And then if your subcontractor sends you an invoice, you can add an attachment right here. And then, like I said, you can actually use QuickBooks Online to print your checks. Now, if you want to see all of your vendors, you can click over here under expenses, and then you can click on vendors. Here we can see a list of all of our vendors. We have Billy Smith. If you want to add a new vendor, you can simply press this green button right here, and you can add a new vendor. If it's a company or an individual, you can add their details here. And then you can also use QuickBooks Online to prepare your 1099s. Now, if you need any help managing your QuickBooks Online, keep in mind, I am a bookkeeper. I own Harrisburg Bookkeeping. Here's my contact information on the screen. You can reach out to me anytime. We can schedule a one-on-one consultation, or I can just do all of your bookkeeping for you. That way you don't have to worry about doing all of this. But if you want to try to do your own bookkeeping, hopefully this video is helpful. Okay, now let me show you property acquisitions and dispositions is probably one of the most complicated parts about doing bookkeeping for real estate investors. Every time you buy and sell a property, you need to do a journal entry. Everything else is honestly pretty simple. I just showed you how to record expenses, how to add vendors, how to add expense categories. Now let me show you how to record a property if you just bought a new property as a real estate investor. You're going to press the plus new button up here and click on journal entry. So if you are buying the property to fix it up and flip it, that's going to be a little bit different than if you're buying a property as a buy and hold. Let me show you what it looks like if you are flipping the property. We are going to add new, and because we are flipping the property, we're selling it in less than 12 months, so it's actually considered a current asset. So we will just call it inventory. You can call it whatever you want. We can call it flip purchase, house purchase, cost of house. It doesn't matter. Let's say you just bought a property for $100,000. Now remember the class. Let's call this 5 Main Street. So we're giving a class to every single transaction that happens in QuickBooks. So we have flip purchase, $100,000, and then we also have settlement charges due at closing. So we'll say we had settlement charges of $4,000 just to use even round numbers. And then if you're looking at your HUD, whenever you purchase a property, you're probably going to prepay taxes. So if we're flipping the property, we're going to record every expense associated with that property as a current asset. So here we're going to add a new category, and here we can actually make this a sub account of the flip purchase. And I'll show you what that looks like in a couple minutes. So we will consider property taxes paid at closing as holding costs. If you pay for insurance, utilities, property taxes, interest, those would all be considered holding costs. The cost to hold your flip while you're flipping it before you sell it. So we'll just say prepaid taxes, $500 under holding costs. And then you can't forget about the earnest money deposit. This gets pretty complicated pretty quickly, but almost always you're going to have some type of EMD whenever you purchase a property. And if you look at your HUD, all of these are going to be debits on the left, and then your earnest money deposit is going to be a credit or on the right. So we'll just say $1,000 earnest money deposit. And then let's say you got a private money loan. So we will create a new account, other current liabilities, and we will call this just a private money loan. And let's say you got a private money loan for $90,000, which means you had to come to closing with the rest of the money. So we will credit the checking account, the bank account, whatever bank account you're using, for the remainder of the money left over. This is going to be due from borrower. So we have the flip purchase, $100,000. Settlement charges, $4,000. Prepaid property taxes, $500. All of these are a debit on the left. Earnest money deposit, $1,000. Private money loan, $90,000. Cash from borrower, $13,500. And then don't forget, add the class to every single property, add the class to every single transaction, and then you can attach the HUD to this journal entry, and we will save and close. Now let me show you what that earnest money deposit should look like before we purchase the property. As you already know, you're going to pay the title company earnest money deposit before you purchase the property. So let's say you want to use QuickBooks to write a check. We can just, whatever the title company is, you can create a new payee very simply, very quickly, and we will allocate this under the earnest money deposit category, $1,000. Just to get real specific with you, in bookkeeping and accounting terms, we are going to debit the earnest money deposit account and credit the bank account. And then whenever we purchase the property, we are going to credit the earnest money deposit account. So this account should always be pretty close to zero because money goes in before you close, money goes out after you close. It gets kind of confusing. Hopefully that makes sense. And if you guys need any help, my contact information is right there. Reach out anytime. I specialize in bookkeeping for real estate investors. Okay, now let's look at your balance sheet and your profit and loss. The cool thing about class tracking in QuickBooks is that we can pull up our balance sheet. We'll change the date, all dates. We can customize, we can filter by class, and we can choose our property. And here we can see checking account negative $13,000 because we just paid $13,500 cash from borrower. Flip purchase. Remember I told you it's a sub account. So we have holding cost as a sub account under the flip purchase. So we purchased the property, $100,000 plus $4,000 closing cost. We had an additional $500 of holding cost because prepaid taxes. We have this private money loan for $90,000. Our net income right now is negative $500 because if you remember, we can actually look not only at the balance sheet by class for this specific property, we can also look at our profit and loss for this specific property. So we see here, we have $500 that we spent to Billy Smith for contractors. Now, let me wrap up this video by showing you how, so that was an acquisition. Let me show you a disposition for this flip property. I usually like to export the balance sheet. So you can go to the balance sheet, all dates, customize, filter by class, export to PDF. So here we have the balance sheet. Now we need to do a journal entry for the disposition. So we are selling the property. Under current assets, we have this inventory, flip purchase for $104,000. It's an asset, so it's a debit. So now when we sell it, we have to credit $104,000 for the flip purchase and then $500 for the holding cost. Now, if you actually do this, you're going to have more cost incurred as you renovate and hold the property for longer. But just as an example, let's keep it super simple. So here you paid back your private money loan, $90,000. Now let's create an income account. Before we do that, let's create a cost of goods sold account, because as a flipper, we are treating this like inventory. So here we have cost of goods sold, and let's just call this flip purchase COGS. And then we will allocate all of the $104,000 to flip purchase COGS. And then we will do the same for holding costs. So now everything balances except for this private money loan, which is okay. I will show you what to do with that in a couple seconds. Now let's look at our HUD. So this is all information from our balance sheet. We have flip purchase, holding cost, and private money loan. Now let's look at the HUD. So in the top line of the HUD, we're going to have sale price of the property. So let's create a new account and we'll call this income, and let's just call this flipping income. Let's say we sold the property for $120,000. Now, of course, there are always going to be some closing costs. So let's create one more new account. We will call this cost of goods sold, and we can actually make this a sub account under flip purchase, and we can name this closing costs, COGS. So let's say maybe there was $2,000 of closing costs. Okay, now finally, so we have the flipping income, the closing costs. There's going to be some interest paid. There might be some prepaid taxes on the HUD, but let's just keep it simple. Now, finally, we have the cash to seller. So this is going to be at the very bottom of the HUD. In this example, when you close on this property with these numbers, you will receive a check for $28,000. But that might not necessarily be your income on the property. That's what I see the biggest mistake. Everybody looks at cash to seller and they automatically assume that is their income, $28,000. But whenever we look at the profit and loss for this property, we might find something different. Depending on how much of a loan you got, depending on how many expenses went into flipping the property, depending on the HUD, closing costs, holding costs, interest expense. Let's see how profitable we actually were. This is why it's so important to accurately class track every transaction on the acquisition, the disposition, and the repairs, and the holding costs and the closing costs, so that we can actually know how profitable our flips are. It goes so much deeper than simply cash to seller or cash to borrower. So here we have the acquisition, the disposition. Now let's look at the final balance sheet and profit and loss for this property. So we'll go to reports. If everything is done properly on the balance sheet for this property, after we sell it, we should have nothing on our balance sheet except for the bank account and net income. So here, the flip purchase, the holding cost, the earnest money deposit, the private money loan, everything gets wiped off the balance sheet, and that's good. That's what you want to check. And then finally, we can go to the profit and loss. And then here, let's change the date. We'll go all dates, customize, filter, class, choose the property, run the report. And here we can finally see the full picture, not just cash to borrower, cash to seller, not just closing costs, not just repairs and maintenance. Everything should be on the profit and loss. We have flipping income, $120,000. That's how much we sold the property for. We have cost of goods sold, the flip purchase and the closing costs and the holding costs for $106,500. Remember, we paid this contractor in this made up example $500. So we received, this is why it's so important. We received $28,000, but we only actually made $13,000 on this property. If you weren't properly accounting for each individual transaction, your profitability might not be accurate. So I hope this video was helpful. If you want me to make more videos like this, send me an email, comment on this video. I'd be happy to do more bookkeeping tutorials for real estate investors. If anybody needs any help, if you're a bookkeeper or a real estate investor or a business owner, there's my contact information. Reach out anytime. I specialize in bookkeeping for real estate investors. I would be more than happy to help you and your business.